Nation. It is Tuesday, September 30th. This is the Daily Rip Live. I'm Katy Perry, joined by Shay Boloor. It is the final day of the third quarter. Shay, where did this year go? How are we 75% through?
It's absolutely nuts. I mean, if you think about the tariff war when like tariffs got introduced, that was only 6 months ago. That
It's
was less than
crazy.
half a year ago. So yeah, that's a Trump presidency. Information moves so drastically, so often that just time passes by really quickly.
I know. I feel like I've lived 12 lives. But speaking of 6 months, we're pacing for a sixth straight month of positive returns, which I don't think people really saw coming back in April. We should pull up some of the shows at the time of that because I know I was freaking out. But there's still time. There's still time to mess it all up. We got 25% of the year left. Our trusty government appears to be dysfunctioning again. A shutdown looms at midnight, barring a small miracle. I was watching the news shows this morning. I don't think they're gonna work it out. I don't know, Shy. It seems like they are not willing to compromise.
Well, I don't think the market even cares if we're going to be honest about this. Like, that's the thing about AI being the main ticket of this rally. The only thing that will buck this rally or turn things around is if we get that glimpse that there is an overspend happening and the faucet's going to be turned off.
Mhm.
Just this morning's CoreWeave $14 billion deal with Meta, we're nowhere close to that. So
What was
government could
the
shut
deal?
down all they
I didn't
want.
even see that. Did that just happen?
Yeah, it happened
Breaking news.
20 minutes ago. An AI infrastructure deal with Meta to supply massive compute power.
Ah, okay.
Interesting. So guess what was the hot theme of what we've been talking about so recently, that there is so much demand right now on uh, computes, especially
Hmm.
GPU dense power and inference capacity right now, that all these hyperscalers, not just Meta, it's the Azures, it's the Google Clouds, the Amazons, like they are just running out of compute to train and deploy their models on at a big frontier scale. So like that gap right now is creating a massive thematic that was not
Mm.
existent 2 years ago, and that is the AI utility trade. And that's why you're seeing CoreWeave land these deals. You're seeing Nebius land these deals. You saw Cipher Mining land a deal last week with Google. You're going to see Iron land deal sometime next couple weeks. You're probably going to see Wolfspeed. Like all these companies that hyperscalers can lean on to expand their capacity, like they're catching a bid on a moment, but that moment could last years, and in that time they're going to go through a massive re-rating.
Yeah, to your commentary previously on AI bubble this morning, I was watching CNBC and they were talking about, is there a bubble? Isn't? And one of the guests, I forget who he was, making a similar case you've made in that different than the 90s with the tech sort of bubble. It's these big profitable companies that are just pouring money into
Well,
data centers, into these partnerships. And his point was you didn't see that as much in the 90s. There wasn't that much investment from these super profitable companies. So the
well,
meta news is definitely relevant there.
I think I actually went on TV yesterday to talk about this as well. It's funny. It's becoming a hot topic. It sounds like AI in a bubble
Hmm.
question mark on legacy media channels, but like I think the market investors should not worry if we're in a bubble, because it is drastically different than it was in 1999 or the dot-com era. Because back then, essentially all these companies were getting funded based on eyeballs and like these banner ads. Dot-com era, like it was based on uh, engagements, really. But today, the capital is actually going into these hard assets and utility style revenue models, like the AI utility names I just mentioned, because they just need to be able to run inference workloads all day. And right now they have a capacity issue. So that means that these returns or these investments are kind of being tied to a compute per query economics. So basically, how many queries these systems can run. And it's not really a consumer fad. Like internet.com era was a consumer fad.
Hmm.
Nobody really knew how to monetize it at the time when they were actually investing. Now they are just paying up to build the rails because they know that they will be able to monetize the train that's going to be riding on those rails. Because like every new Copilot from Microsoft, any multi-module agent, uh, that ships is going to have to run inference all day, so they know that they're going to be able to monetize and a flip of a switch as soon as they have the tools necessary. So we're nowhere close to an AI
Yeah.
bubble at all.
Well, speaking of inference, I mean, it feels like every day there's a new sort of deluge of AI news. I think we had Anthropic had an announcement yesterday about a new Claude model, and then this morning I caught a headline in TechCrunch from DeepSeek. So if you remember, they caused a little bit of a fright a few months ago because every time they come out and say how much better they are than some of these U.S. companies, the market freaks out. I don't know if that was just a one and done or not, but they're basically unveiling or saying they're unveiling its V3.2 model, which uses new quote unquote sparse attention system to slash inference costs. And they're claiming they're slashing these costs by 50%, cutting them in half. And so inference, of course, you talk a lot about Shy. It's the cost of running these models. It's a growing bottleneck in the AI boom. Researchers at all these companies are trying to find ways to make transformers more efficient. So they're coming out with this Lightning Indexer product, and again, they're claiming API calls could be 50% cheaper. Um, how important is it, Shy, in the U.S. for us to beat them on this the scalability front in terms of what DeepSeek is doing? Is winning at this front going to dictate who sort of wins out, U.S. versus China in this race?
I don't think the model quality is going to dictate that. I do think that, take your political beliefs aside, like we do have a very pro business administration on these national security themes. Like these themes are a
Hmm.
national security component. They're in the lens of, if we don't win them, we're going to potentially lose our leadership in the world. And I think that's huge because it's true. Like this is the first time since the Industrial Revolution where things could drastically change, where something's going to structurally shift across the whole world. Everything that we know of the world is going to drastically change. And I think that right now, whatever you see with DeepSeek, like it's nice to see, but it's not like model quality is based so much on chip quality, distribution, etc. Like we have NVIDIA as our key partner. Like that, if we did not have NVIDIA and it was just like a free for all on whoever's using a GPU engine, like there was no, it was apples to apples, like I'd be very worried. I really would be
Hmm.
very worried. But now we do have NVIDIA, and I do think that DeepSeek, it's not like we're at this phase where it's not about model quality at all, and I think that nobody really cares as much about that because we have plateaued a bit. I don't think there's that much of a difference from 6 months ago to now on model qualities, which says to me AGI is years away, but also tells me that I think maybe the shift is going to focus on inference workloads. And as a consumer investor, you need to focus on inference or the tokenization of AI. By tokenization means like I put something in ChatGPT that is one token, for example.
Hmm.
So I think the risk right now is we build empty AI cities. Like all this investment is
Yep.
assuming that demand is going to be there for AI because the world's changing and they see proof of it initially. But the only way to actually track that it people will come to these cities and actually operates, go commutes, is through inference. And right now we're seeing inference booming right now, specifically Broadcom, Astera Labs. You're seeing the networking side of NVIDIA's business. So like I think it's really important that these model qualities, like I hope DeepSeek continues to improve because I don't think that's really the hot topic right now or bottleneck. Like I think that democratization of models is going to be huge because it will accelerate the inference uh, that we need in order to validate this theme. So that's kind of my
Yeah.
takeaway on that.
Well, let's stay on AI for a second because I know you guys at Futurum rebalanced your AI 15. So I'm curious who got in and perhaps more juicy who got kicked off the list. Can you give us a quick recap of sort of who's in, who's out, and why the changes were made?
Yeah, so I think first off, you guys don't know, Futurum AI 15 is our first list since I started at Futurum that launched 3 months ago. It became a very popular image and narrative that hit media and FinTwit, etc. I think initially we were kind of focusing on who had a moats, who had an actual competitive advantage in the new digital economy. We were thinking a lot more long term on this list. Now we're kind of restructuring it towards what is the heat map where incremental capital in the AI economy is actually being deployed right now. And we at Futurum believe that AI is kind of having its railroad moments where the
Mhm.
new growth curve is in the back end AI infrastructure. So when I say that, you have to kind of think about the hard assets that make AI at scale even possible. So we're talking racks, we're talking power, liquid cooling, secure data pipes. And I think the money that's going into these rails are kind of coming straight out of the operating cash flow of the hyperscalers, the
Mhm.
Microsoft, Amazon's, Google's, Meta. Just like you mentioned, the person who went on TV to talk about like it's different from .com era. It's because it's being funded by actual profits, not just fugazi money.
Mhm.
So I think that the biggest update right now was the AI utility thing. Like we are so bullish on this companies that actually supply the heavy gear that makes AI work. So a brand new name that landed on the list that wasn't even an honorable mention 3 months ago is Nebius. I think Nebius is one of those highest quality AI utility names because, like I mentioned, the constraint on AI isn't model quality. It's the power and inference capacity, specifically a GPU dense one. So I think Nebius landed that $17 billion multi-year contract with Azure, which essentially guarantees utilization of their GPU rich data centers, and that locks in demand from one of the largest buyers of compute out there. And I think that they also have a lot of elements they can add on top of just being a sovereign grade compute infrastructure name. The next one that landed on the honorable mention is Iron. Like, I
Mhm.
think a lot of people think about these co-location players that of just all they do is rent floor space. Iron's very different. Like they're vertically integrated. They control one of the cheapest renewable power in the sector. I think it's 3.5 cents per kilowatt. And they also operate their own AI cloud with tens of thousands of NVIDIA GPU, H100 class GPU. So I think that they partner directly with NVIDIA on the liquid cooling racks. They have a very interesting structure that lets Iron control more of the margin stack. So from the power all the way to the inference, that's very rare in this space. And I don't think they just need one single mega tenant lease to start monetizing capacity. They can do it in a lot of different ways. And I think it just boils down to, like I said, a long story short of why Iron, but it's really the cheapest renewable power in the sector. That is the selling KPI metric that you need right now to get these hyperscalers to buy in, and they have the best in the biz. So that was the new entries that we had.
Real quick, shy on
The,
those two. Looking at the chart to someone who's not familiar with these companies, it looks like their run ups have been insane year to date. You still think there's plenty of room for these to grow? Uh, Looking at Iron, like up 330%, I think, and Nebius, this is like you think this is the start of a trajectory over time that's going to go up even more.
yeah, so I think so it's really important to know what caused this run up in Iron, or just in all these like miners that are just pivoting towards something drastically different. So I think that both Cypher and Iron, for example, they're kind of monetizing, they're chasing the same opportunity, which again is supplying the infrastructure that hyperscalers and a lot of these AI labs need to keep training and deploying models. Like that's as simple as why they're catching a bid. They were crypto miners, now they're going to be selling they're using their power and GPUs to sell for data centers. Like it was I underestimate how easy of a flip of a switch it would be for that.
Mm.
So I think that those names are kind of leverage proxies on the AI shortage that we're seeing right now. And they're going to soar when compute demand outpaces the supply. And we think that that is years away from actually leveling out. So like I don't think we're anywhere close where supply is gonna outpace demand. Like we're so early. Like you heard Lisa Su from AMD just say last week, we're in year two of a 10-year AI build outs. Like I think we're just years away from a more of a balanced demand supply. So in that instance, these hyperscalers who have billions and billions of dollars that they want to invest to make sure they stay ahead in this AI race, they're going to look for crutches to make sure they uh, to solve their constraint issue. And there's a couple great ones out there. So I think that right now you're seeing a lot of like repricing a bit on the re-rating on, oh wow, their AI data center plays, and that's why they've just gone berserk.
Mm-hmm.
I do believe that there's some future demand vacuum that's being factored in right now already for it. There might need to be some consolidation because the run-up's huge. Iron, for example, they haven't even announced a deal yet. It's like it's all being priced in already. But the theme is very real, and I think that that is kind of where the alpha is going to be had right now.
Yeah.
So that's part A. Part B on what we removed from the future, like
Yeah.
what
Who
was the
got
bad
bumped?
side.
Who's out?
But
Losers.
so
Who are the
uh,
losers?
we downgraded a lot of software stocks. I think
Okay.
that I I or we, like, I'm gonna say Shy Boloor. I thought the stage 2 of AI would happen in year 4, year 5 maybe of AI. Now I'm realizing how the longevity of the AI build out, especially in stage 1, is going to be not just a couple years, but potentially a decade. Now I'm thinking that the software is kind of getting kicked down the road a bit of like there is an AI tsunami coming from that space. I don't think there's going to be enough clarity in the market's eyes to see who's going to be the winner and
Mm.
loser unless you are a data infrastructure player, or you actually can monetize it ASAP right now. We're seeing signs of who those people are, but it's nowhere near the amount of dollars that are being made on the hardware side. So I think that software is just in a you're doing good, but you're not anywhere ready to be on stage right now in the AI spotlight. So you're just gonna hang out here and be. I forgot what the name is of the person who's like the star of a theater show, and they have a second person in case the
Oh, the
star is like.
understudy.
I think software is the understudy right now of
Ooh.
AI. So I think that
That makes
I
sense. So
just
doesn't in tech cycles, software follows the hardware?
it does like
Yeah.
right now for the .com era, like we can reference it back to that. Like, what was the hidden gems of that era? It wasn't Verizon, Cisco, AT&T, like the companies that were laying down the structural arteries of the internet. It was the businesses who are building the online marketplaces on top of the structural artists, Amazon, Google, etc. I do believe that is going to be the hidden gem. Like in
Mm-hmm.
25, 30 years, looking back, we're gonna say these names were the hidden gems of this AI era, and that's gonna come from stage 2. Palantir, stage 2. I think we are always gonna look back on that was the hidden gem of this AI era. They went from 10 billion to 300 billion or whatever it is, and they're going to maintain that going forward as long as AI theme is hot. And I think it's going to be hot for decades. So I think that software is just an understudy. They're going to have their time in the sun eventually, but right now I just don't see near term alpha. And then also a lot of these legacy players are just using AI more on commentary, like they're going to
Yeah.
monetize it or going to monetize it. If you're not seeing proof in the pudding right now, we're talking Cisco, we're talking um, Qualcomm, like those kind of names. Like we're just like, again, like you guys are great. You guys are legacy players. You guys will figure it out. But right now, the compute capacity is the hot topic, and AI utilities where you want to allocate
Yeah.
those sources. So yeah, that's kind of the adjustment, and we'll see how
Interesting.
it goes.
How
Yeah,
often do you rebalance it?
every 3 months. So
Okay.
after every earning cycle, because I think
Okay.
that AI is just moving so quickly right now that
Yeah.
you learn a lot on earnings reports and you see where the bottlenecks are and like who's like maybe doesn't have their finger on the pulse as much as you thought they did.
Yeah, you can if you listen closely to the you can kind of tell who gets it and who's just reading the script. It's pretty clear. And I'm curious what you think. So these legacy, the Qualcomm, Dell, Cisco, how the hell are they supposed to compete for AI talent with like Meta and X? And like what is like what's Qualcomm supposed to do? Yeah, I'm
They
not trying to be mean to
no, but
Qualcomm, but
I mean, it's I don't know. It's a narrative issue. Like people don't think IBM quantum. People don't think Qualcomm robotics. Like
mhm,
those themes are going to benefit those legacy players. Like they will, but uh, it's just not sexy enough. Like you said, like I
yeah,
think AI brains they are on the younger side, and the younger side is factor in aura more than actual resume probably. So I think that it's a similar issue that Apple's having. It's not just like those kind of companies. Like
yeah,
who wants to work at Apple when the team lead has been there for decades and is comfortable in monetizing their services, or like AirPod 7, AirPod 8s, like that's their big rocks because they make so much money in that BU. But all the fun, innovative AI modeling and all those like futuristic secular growth themes is kind of like they know they can leverage that because they have such a massive moat in their devices. But if you're an AI brain dedicating your prime years, you're not going to go towards these legacy companies. You're going to go towards, like you said, I want to extract as much as I can from the Zuckerbergs, from the Elon Musk, Sam Altmans. Like these are the Mount Rushmore of AI, like those figures. Like I want to learn as much, and maybe I do my own thing. I become work towards becoming a face on the Mount Rushmore along with them. So like, yeah, it's a big issue actually.
It's funny to think if the if tech were like sports leagues where like the companies with like the shittiest performance got their pick at the top talent. So you'd have like some like genius coming out of Stanford going to like Dell. And he's like, I guess I got to start somewhere. It's totally not free market capitalism, but it would be very entertaining. I would love to watch that draft. And some of these guys and gals have agents now, so we're getting to that place. um I know we touched on the government shutdown, your POV. Markets are a little down on sort of the uncertainty, although it seems at this point it's a foregone conclusion that as of midnight people will not be working. One implication of this though is we had some jobs data coming later this week, and elected officials have confirmed that we will not get that data. Obviously, if the shutdown happens, again, there's other places to get some of this data. We have the ADP data, we have there's other ways to get information, but that's one sort of piece of it that investors might be having pause about, not having that steady stream of data. If you guys aren't following, if you guys aren't watching C-SPAN 24 hours a day, basically, the Democrats want some healthcare concessions. The Republicans are saying no. It's less about short-term spending and more about political leverage, it seems. So you got healthcare subsidies on one side, fiscal restraint on the other. It's sort of a philosophical showdown. But yeah, we were supposed to get that BLS data Friday. Ain't gonna happen. UBS warning that rumor and unreliable surveys could replace hard numbers if this goes on. Could lead to volatility and impact kind of the decisions the Feds are making. Um, Trump and VP Vance have signaled they're willing to let the shutdown drag on, because they believe so strongly in their side of this. So we'll see. I think markets maybe, to your point, could wobble a little, but Shy, I don't know what would take this run down at this point, and I don't know if it's a shutdown, even though we haven't had a government shutdown properly since 2018. So it's been a minute. They're kind of on a hot streak in terms of doing their job.
Yeah, I mean, like I said, I think it's all smoke and mirrors,
Yeah.
anything that they do. But like I mentioned again, AI is such a super cycle right now that we don't get this kind of theme every 5 years, every 10 years. Like it's once in a generation. It's like we are in unprecedented times right now where it's just it feels too easy, but it almost kind of is where these hyperscalers who are profiting billions of dollars right now that are just funding this theme that is nowhere close to being maturing. Like everything in that stage one of AI is probably going to do well. That they're experiencing a renaissance, and there's almost a type of cyclicality risk that's being removed from hardware, where typically, if you guys don't know, like semiconductors go through a massive cyclicality where there's some tech renewal or innovation. So we have to spend up to get all the tools. And once we have all the tools, we can figure out what we want to do. And when we figure out what to do, like we're just not going to spend as much on CapEx for those tools. That's the cyclicality for semiconductors. Now, AI is going to change everything forever. So inference workloads are going all day, nonstop. That's going to require so much hardware constantly, and probably more than anyone expects that they're going to need to have right now, because nobody knows the ceiling on AI. Like it's actually oxygen. It really is oxygen and intelligence. And every single day you use you breathe and you also use your brain. So think about that's the applicability of
Mm,
AI a bit. So I think that
yeah.
nobody knows the ceiling, and every 3 months we get reminded it's bigger and bigger, the AI pie. So like it's almost a good way to, if you're in the government or you're doing something macro wise, like you can get away with a lot that the market will probably pull back drastically. You're like, oof, fear, fear, fear. We're not going to experience that as much because the AI is like, there is some like chess moves that probably can be had right now that
Yeah.
they can get away with. Previously, they wouldn't be able to.
Well, don't give them any ideas, Shy. I've had enough of their shenanigans all across the board. But when you bring up AI, one person that is worth listening to when it comes to AI is Walmart's CEO, Doug McMillan. And that is because Walmart is the world's largest private employer. So when you think about people who are waking up in the middle of the night, thinking about AI impact on labor and cost cutting measures, Walmart has got to be right up there. We've brought them up in the context of some of these robotics conversations. He recently did an interview and he said AI will literally change every job. No surprise there. But the company is definitely leaning into AI to cut costs. This is something we've seen over the last few months. You know, back in the spring, people were sort of shirking away from admitting that, and now they're straight up saying, like, "Yeah, we're trying to get rid of jobs." But they're looking to streamline tasks, stay competitive, while balancing the fears of job elimination with promises of retraining and new opportunities. Interestingly, he said he expected the global headcount to stay flat over the next 3 years, but that could be what you're talking about, Shai, where it's going to take a little bit of time for this to really work its way uh, through the system. I also saw this morning on CNBC, JPMorgan demoed a new AI tool using that their iBankers are using, and essentially you type in a couple prompts and it makes a whole like investment deck for you, which is, if you're a junior investment banker, this is what you do all day, all night, every day, and get paid handsomely for it. And so, the questions start to come. They also mentioned, as people in the US don't need to be making these decks and theses, they're powering the AI. Maybe some of the team moves to Brazil, maybe some of the team moves to India. Um, but do you think 3 years? I saw that. I'm like, is he going to kick himself for saying that? Because I feel like flat over 3 years seems ambitious in terms of job retention.
Well, it's funny. I interviewed a journalist this week about will AI take your job. So I am. This is I did a lot of research over the weekend because
Yeah,
if you guys on a journalist interviews 101 for an hour, like I've gone poked the. It's been like a job interview. It's pretty
yeah,
brutal because the journalists actually like they investigate. They're detectives
yeah,
and they ask a lot of the tough questions. So I read up a lot about this, and I know my takeaway is like with the Walmart comment is CEO. I think the first wave is going to be a lot of job loss. I think that the reality is a lot of positions are going to get streamlined. Like a lot of the repetitive nature of what the old economy was, like the jobs that were tailored for the old economy, but not the new one, they will get removed. So the first wave is going to look like layoffs, layoffs, layoffs. Then as soon as the fat gets trimmed, they're going to start realizing, all right, what are the type of roles we need in the new AI economy? And they're going to increase their workforce, increase their type of jobs they're going to offer because we've seen this pattern before. Like every industrial revolution before, it just we've gone bigger, more jobs, and the economy's gone bigger. Like the what was the other one? I'm trying to think about like every industrial,
Accenture.
yeah, like well, yeah,
Are
the
you talking about
steam
layoffs?
replaced field hands. Like I think
Uh,
spreadsheets decimate
yeah,
a lot of the staffing in the 80s. Every single time the total economy ended up bigger though. Every revolution we've had because new tools lower the cost of repetitive work, like I mentioned, but they also free up human capacity for higher value tasks. That's what's going to happen. I think
yeah,
AI will do the same thing on a much larger scale, but like, yes, repetitive work, the lower end of jobs are going to be removed, but there's going to be a lot of higher value jobs that are going to be added. And I think right now the psychology is even, it's just incredibly intense because the transition is being measured in quarters and not decades.
hmm,
Back then, like the steam electricity, it took 5 decades, I think, to really penetrate and really start scaling up. Right now, we're seeing large language models. The workflows can be deployed across a whole entire finance section. It's being like these LLM workflows are being deployed across an entire finance or like customer support function in a matter of months. So that compressed not just cost curve, but also the emotional response inside. being an employee somewhere. Like you feel it in the tremor of all these routine knowledge jobs. And I think that you feel like there is somewhat of a I'm might be replaced type of psychology that's causing a lot of fear
Yeah.
mongering. And I think that a lot of the top quarter of workers are who lean in early are going to do really well.
Yeah.
And I think I gave the reporter some examples from people I've talked to and noticed like an analyst who learns how to prompt in actual GPT powered
Yeah.
bots to build these models out. They suddenly that person's out doing work of years
Yeah.
in a matter of like weeks, if that. So like I think it's just like in any revolution, it's up to you to decide, are you going to be replaced, or are you going to be a beneficiary? But I just think that long term, like what the Walmart CEO is saying, like I, I don't think there's going to be that much workforce reduction. I just think it's
Yeah.
going to be
Change.
changing. Yeah.
Yeah, I mean, so Accenture laid off 11,000 employees. But that's what the consulting piece, and that's all kind of part of this. But she also said when they're hiring now, they're prioritizing for people who are trained in and skilled in AI. And you saw this also with the new Open Door CEO put a memo out, and that was like, you guys better be AI native. Like, don't ask me or your coworker for an answer. Like, figure it out yourself, or like pretty much. And so I think you're right. And it's fascinating. All this feels very personal to us because, you might have a cousin at Accenture who's been there 20 years and they're a little behind on the tech and they're going to get kicked out. And that's like a personal thing. You think, oh, what is that person going to do? But to your point, zooming out of the quarters over time, the net positive on society and jobs will probably be there if history is will repeat itself. But it's weird because we're like living in it. It's like emotional and personal
Well,
because like we are seeing our friends impacted and things like that.
well, I also think it's the first time blue and white collars jobs are getting disrupted at the same time.
Yeah.
That's like so now it's just not like they're not knowledge workers. So like it makes sense they need to adjust because they didn't spend years training their craft to go to school and get a degree, etc. Now it's like everyone in the world
Yeah.
it's gonna get justice. So now everyone's sharing in the pain. But
Yeah.
also like I don't like I've been I think teenagers have such a leg up now, and if they benefit from these tools, AI tools, vibe coding, create their own product, if they have an idea. When I was 15 years old and I had an idea, what would I do from conception to actual execution? Nothing. I wasn't able to. Like I'd have to convince a dad to
Yeah.
believe in my narrative, and then he does everything from there. But like
Yeah.
the odds of a 50-year-old believing a 15-year-old on a vision is rare. So like now, these teenagers like they actually have the tools to do something with their ideas, and that's going to create a lot of young millionaires.
Yeah.
I think the millennials might be a little screwed. I think that's like the boomers are far enough in like success in life
Boomers are
where
good. You
they're
guys are good.
coasting. I think millennials are the squeezed
Yeah.
about generation, and it's up to like you have to learn the tools or get left behind.
God damn. We
God
just
damn.
can't not catch a break. I also saw, like, obviously Gen X, I saw data. Gen X is in great shape as well. No one talks about Gen X because apparently they don't exist. No one likes to talk about them. Gen X is going to be great. Millennials, though, when you get down to this generation, it's like, God damn. Like, we're just like, there's so much stuff we've had to wade through. And I saw a TikTok yesterday. Someone was saying this in jest, but they were like, a younger person was like, "How did millennials get through like the Great Recession?" And like this girl was like, "We drank a lot. We were partying our faces off. Why do you think the best music came out 2006 to 2012?" And it is kind of a tongue in cheek thing, but yeah, to your point, you gotta. This is a moment to look in the mirror and decide who you want to be. But it's also interesting times for leaders building these companies. And I think the interesting thing with all this is that to going back to the initial point about the AI not being a bubble, and you're seeing the investments with these companies, and you're seeing impact on revenues. Usually, that results in more hiring, but with AI, it's probably the opposite. But to your point, you're saying it might be just less hiring of what the roles were before and more of new roles, which means we all gotta get new skills. But I think it is funny because I remember like 6, 7 months ago, I was talking to a lot of people and they were like scared to admit they were using these tools at work. Like they thought they were gonna get fired for cheating. And now it's like if you can't use them, you're out. And that was very fast.
Well, there was years ago when I was in the W2 world or corporate strategy, like when Chat ChatGPT got created, I was like, wow, I knew instantly my job was going to get replaced. I was like, this eventually, I don't know when, corporate strategy is going to be a just a like, it's just going to be a nice to have, not need to have with AI
Mm,
now. I was like, all right, well, how can I use this for myself? And I was like playing around with it at work, and like in the initial phase, like I think people thought I was playing a game almost. Where like, go back
yeah.
to work. Like, why are you playing around with this tool? And I'm like, you have no idea that I'm learning this so we can optimize this. Like, it's work related. But first wave was all like, it's like playing a computer game. I was just like
Yeah.
having fun searching Google, like the Michael Scott episode on in the Office. Like they banned YouTube,
Oh, yeah.
and they viewed it as like YouTube. Like I'm just going finding videos and like having fun. Like that's not the case. That wasn't the case. But I think now like AI is real. I think people are realizing
Yeah.
AI is very real. And I even had I was on a seaplane going to Canada just a couple weeks ago, and I in that in this like place that I was waiting for my flight, like it was totally nowhere near society. I heard these two guys talking about AI. I'm like, damn, that's great. I would
Oh,
not expect
okay.
those two people to talk about AI. They're in the 50s. Like, oh, have you seen this AI? Like, I think that's where it's like, oh, it's actually really spreading
Yeah.
now. It's actually scaling a bit more.
Yeah. It is wild to see the adoption take off over time. Also, ChatGPT has a huge consumer campaign going, and it's built around the idea that AI is intended to make you smarter. So that you'll probably see billboards out there for that. Claude is Anthropic has done a lot of advertising. But let's check in on the markets. We're in the red a little bit. Of course, we're all waiting for the elected officials to maybe or maybe not do something. But on the month, we are still on pace for monthly gains. So we'll keep an eye on that. I mean, Shy, let's talk about just like scorecard first 3 quarters of the year compared to other like if you had to give a grade to your portfolio and
Oh,
you could be nice to yourself, you would do harsh. How would you score first 3 months of the or 3 quarters of the year for
that
you?
that is a fun question. All right, so I'm as of this morning up 64% for the year in the portfolio.
Okay, so that's a
Market
D.
is
I'm
up.
just kidding.
Market's up 17% QQQ, but RK is up 52% now. That's
Kathy.
is that real? That came out of nowhere. So all right, so to rate my performance, I did not cut my losers quickly.
Okay.
And what I mean by that is I was so fixated on long-term moats that I thought eventually they'll figure it out. Like they have such a duopoly or monopoly in what they do. And I was like, I know this is a transition year. I'll wait it out. I think I put too much weight on transition years. Like I'm talking Unity, I'm talking Global E, I'm talking
Mhm.
those kind of names where I knew that they had a macro reason on why they're struggling that was out of their control, or they had corporate governance issues that they got a new captain on the ship that they're going to turn the ship around. So I knew that the transition was going to take at least a year, maybe even a couple years. I think that for me, I was willing to eat up and wait. And I was like, that was the looking back. I was like, why did I do that when we're in the super cycle? I know where the puck's heading. Why didn't I just cut bait on those names? I'll keep watching them until I get that first earnings report of like, oh, things are actually okay, it happened. And I'll get in. I'll maybe miss the 20% move, but I would participate in the hot pocket names like that AI utility trade, for example. Robinhood, I added Robinhood when it was at $20, my watch list. I kind of wanted to wait and see how my thesis came on the monetization of eyeballs and like how it's so easy for them to add products and keep monetizing like the predictive markets. That was massive for them. That's nearly all profits, and
Yeah.
they're getting so much money right now into their ecosystem on that alone. Now it's at 120. I dumped Unity, Global E. I could have been in Robinhood in 6x in less
Yeah.
than a year. Another one is
What a coulda, shoulda, though, you know?
yeah, totally. And I also think that I started my journey 3 years ago on a growth portfolio, going from 100K to a million. So that title made me feel like I shouldn't invest in the big players. I
Mm,
shouldn't invest in Meta. I shouldn't invest in Broadcom, Nvidia, because they're trillions of dollars a company. They're $500 billion plus companies at the time. Like I should go for the growth companies that are like the 10 to 50 billion and figure out that's where my alpha should be. I think I put too much weight on market size of the companies than to really I should just invest like they are the best in what they do, and the theme is only going to broaden out because of AI, so they're going to be the biggest beneficiary, and that's what we've seen.
Yeah.
Broadcom is the most disrespected $2 trillion company in the world. Um,
Or like
I think
Intel
that
was up 30% in one day. Like sometimes the big dogs can move.
I, I also think AI is going to make the big dogs bigger, and I think that's going to
Yeah.
kill off the rest almost a bit. Where these the moats are these suite of products and eyeballs, and that's only the bigger players kind of have the best moat of that. Everything else they could probably replicate from the smaller players with AI a bit. So I think that yeah, I think looking back, I made those errors, and I also did tariff wars. Like I bought the tariff in April when it was VIX was at 50, market pulled back 20%. I bought that, but I still held a 7% cash position after I was
Yeah.
buying. I should every time the VIX is above 50, I should allocate all my soldiers and like this is too much fear. It's not COVID level, etc. So I was like, I held on to a bit too much cash, and then I've had 15% cash position all summer. So
Wow.
I'm sitting on too much cash, and everything's just running. All my high conviction watch list names, all they've done is run. So now I'm
Yeah.
like, what now?
What yeah, what's the plan? So what's the plan for Q4 or what's the prediction?
I still think right now we're overbought on the indices. I just don't know what new variable is going to have to hit the news wires to kind of buck the trend. I see a consolidation happening. I see certain earnings reports get taken out of context on what's happening. I'm talking Amazon. A lot of people are talking AWS is lagging on growth compared to the Azures and Google Cloud. They think it's a demand issue. I personally think it's purely compute and energy constraint. And I think that they have, when you hear management talk about it last couple months, they kind of indicate that as well. And they're making sure they have all the tools necessary so this doesn't happen again. It was purely a fumble by management. So I think that's a really interesting catch up trade. And I
Yeah.
think that people are just like riding them off a bit a little more than they should be. It's the lowest multiple EV to EBIT multiple in years. The lagging Mag 7 name, for example, that should not be the case. It should be Apple as a laggard Mag 7 name, not it should not be Amazon. Amazon's gonna be a major beneficiary on AI. So like I think
Yeah.
that's like a narrative disconnection that if like Amazon's at 220 still, for example, I've been buying Amazon. I think this is gonna be my top position probably because I when the market's ran up as much as it has in my favorite growth names, I have cash coming in every month. Where do I allocate that? I'm not buying Cloudflare above 200. I'm not buying Palantir above 150. I'm not buying
Jumia.
Jumia is above 10. Like I'm not
Okay.
buying Rocklab $50, IonQ
Yeah.
$70. Like these names have all ran. Amazon, I think is really important for every portfolio to have that one anchored flagship position that you never have to worry about. And
Yep.
just they're gonna be a slower mover than the rest of the delta in your portfolio. Amazon is that for me. Another mistake. I dumped Nvidia for Amazon this year.
Mm.
And that was a huge mistake. Huge mistake. So I thought I own Astera Labs. I own all these like AI players
Yeah.
that if Nvidia continues to do what I think Nvidia is going to do, I have the secondary beneficiaries on that already. So they're going to perform really well. I
Yeah.
was right. Like Astera Labs has been killing it, for
How could
example.
you
But
possibly predict like the force of like the US government in terms of not helping
mhm,
Nvidia, but that whole like east west strife and where Nvidia fit like you could no one could have seen that coming. I mean maybe someone, maybe Michael comes on, he seems to know everything. He mightn't have known, but like you couldn't have seen that coming because there was points of last year where they were like can't sell your chips here. It looked like they were like, "Uh-oh, are they in trouble?" And then now it's like it seems like everything's falling in their favor. So it's hard to make moves not not knowing what's going to happen
mhm.
outside of, the business world.
No, it's true, and I think that you can be bullish, but sometimes you're not bullish enough,
Yeah.
type of thing. And I think that Amazon is just a way of like de-risking AI a bit. Like their AI beneficiary clearly, but their logistics arm is unmatched. So there's almost like a safety net on, like, if AI does have that middle of that S curve, Amazon do just fine because of their e-commerce business and like everything else they're doing. That
Yeah.
was a mistake. But also like right now Q4, like I don't know, like my portfolio is up. Let me look. It's up 430% since 2023. Like
I mean,
what? No, what am I supposed to do? Like, am I supposed to? Like
take a
that's
lap. Go
unnatural.
get a
No, but
drink.
it's unnatural though. Like it's like not
Yeah.
supposed to be like that. So like I don't want to be aggressive. Like I want to have cash because every year we've had some black swan event past couple years.
Yeah.
I just want to be prepared, and unfortunately, that strategy has not worked the past couple months. And it's fine. Like you're hearing me complain that I'm
Yeah, you're
outperforming the
completely like
market,
60% because you've just
but
been like running it
I
up.
know. But
But
yeah,
I hope that maintains for you. But I'm sure we're gonna have a spooky and spicy fourth quarter. If the rest of this year has been in any indication, um, we'll be back tomorrow to check in on if the government is doing its thing or not. We also have a couple guests tomorrow. So Jeremy Newsom is going to be back on. Love that guy. Such a bundle of joy, positive energy. We also have a CEO coming on that has helped Morgan Stanley bring crypto products to its wealth management solutions and E-Trade. So talking about sort of how those companies are innovating and a couple other surprises along the way for this week, including Thursday, we have Better.com CEO Vishal Garg, who's going to join us. And also Steve Howe from Bloomberg, who has some new charts for us on the China trade. So be sure to mark your calendars. We're on at 9 Eastern every weekday, Monday through Thursday. Shy, I hope you have a good day out there. I hope you get 400% returns. You report back with us tomorrow. And we'll
appreciate
see
that.
everyone back here